Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, the Bank of England awaits clarity on wage growth before interest rate cuts, says Deputy Governor. As well as that, Apple halts US sales of Apple Watch before Christmas after losing a patent case. Now, we've got lots to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. But before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is the Bank of England. Now, uncertainty over the UK's labour markets mean the Bank of England will wait longer before interest rate cuts are cut, or before interest rates are cut, or decisions are made over the inflation rate. And this follows the Bank of England's decision to hold rates at their current levels last week, with a more hawkish tone delivered as well. And this is what we've discussed to great lengths, especially last week where we covered the actual decision. Now, when we came out of that decision, we did note how, in contrast to the ECB, to the Fed, where in both of those interest rate decisions we did hear more of a dovish tone, especially from the Fed, which drove that kind of bond market rally and stock market rally. That more dovish tone that we heard from the Fed, let's say, was something that was not repeated with someone like the Bank of England, where we did hear this kind of reiteration that, interest rate cuts aren't on the calendar just yet, and we're focusing on the data at the moment, and there's still a chance of a rate rise, and all these kind of mentions and points to be made by the Bank of England, which did drive a more hawkish tone towards the financial markets. And obviously this would put the Bank of England at the current expectations to be the last of those central banks that we've just stated, so the Fed, the ECB and the Bank of England. The Bank of England would be the last to start cutting rates, with the ECB of course being the first, with the Fed in a close second, but the Bank of England being far later in mid-summer. So this is something to keep your eyes on. And I think it's important to note, the reasons for the Bank of England. So although, of course it is important to cover the key events like the Bank of England's interest rate decision, where we did hear the main rhetoric from individuals like Andrew Bailey, it is also important to kind of cover, the follow-up of these kind of meetings and decisions, where we do hear from these individual policy makers, some of them with more hawkish positions, some more dovish positions, but here we do have the Deputy Governor, who is talking clearly here about the lack of statistics, which is making it hard for the Bank of England to actually make its decisions. So we'll talk about that just now, with the Bank of England Deputy Governor saying volatile and inconsistent data made it hard to tell how fast wages were growing and why, with these questions needing to be answered for conclusions to be made on inflation. Now, this uncertainty, he warned, could be very costly for the economy by affecting rate levels, of course, with these comments highlighting the frustrations for policymakers over data problems, which have made it hard to answer key questions about the UK economy. Now, financial markets, however, are still pricing in 1.15 percentage rate cuts by the Bank of England by the end of 2024, so by December of next year. This is important to note, of course, as we have been kind of focusing on rate cuts. How soon are they going to be? We're at the top of our rate hiking cycle, and we did mention how there's varying levels of rate cuts which are expected next year. As we did kind of presume with all these central banks originally, before we kind of saw this steep drop in inflation, that basically rates were going to stay higher for longer. But, obviously we're seeing this rhetoric change now. And so we're really focusing on how much percentage points are we going to see rate cuts by next year. Now, the pressing issue for the Bank of England will be whether wage growth will continue to fuel prices of labour-intensive services, and whether this wage growth is as a result of a tight labour market, or in fact just one of response to increased consumer prices. And this is important to note. We're looking at the root cause now of why this wage growth is now being seen. And many people, I think, will often look at the markets and just look at what's the figure that the Bank of England is publishing for its interest rate. What's the the headline news from Andrew Bailey? But But ultimately, you're kind of falling behind the markets there. And what we're really hearing from, the deputy governor is something that's far more in depth and far more useful to us if we're looking ahead and trying to price in, the future of certain assets and foreign exchange kind of markets as well. And here we're literally diving into the intricacies of what may be driving the Bank of England's rhetoric. So we're here talking about the lack of statistics. We're talking about them trying to determine what's driving this wage growth. This does seem to be the key identifier of significant inflation or persistent inflation within the UK. And if we can come down and decide whether that's as a result of labour intensive services, or whether that wage growth is as a result of a tight labour market, or in fact one as a result of just responding to consumer inflation, this will be important to understand, as it will shape the way the Bank of England proceeds. So this is why it's so important to stay on top of. But at present, the Bank of England does not know how many people in the UK are looking for work, because the ONS is not publishing its usual estimate of unemployment. So that's important to note, of course. The MPC, so the Monetary Policy Committee, now want to see evidence across 7 indicators before they decide on rate cuts. So definitely keep your eyes on this. Keep listening out for, not just with the Bank of England, but with the Fed and the ECB. Keep listening out for any of these kind of key policy makers and what they're saying about the markets, about the economy, and about interest rates at that time, so that we can note that down and proceed better within the markets. That's all to talk about on this chart, on this article, though. Next to talk about, of course, is the next article, that being Apple. Now, Apple will halt its sales of their Apple Watches in the US before Christmas. This comes as a result of Apple losing in a patent infringement case, with this threatening Apple sales during the holiday sales season. Now, obviously, the holiday sales season, this is a prime time for US businesses, for Western businesses as a whole, as they do get in on, obviously the hype around Christmas, as everyone kind of goes out and buys their presents, buys their gifts, and, accumulates lots of consumer goods. Now, prime high street names like Apple should benefit greatly off Christmas, and they usually do. And we have heard recently, not too long ago, I think around September, about the new Apple Watch, the Apple Watch Ultra 2. However, what we're hearing here is there's a possibility, or very much a likely possibility, that we won't be seeing those being sold over the Christmas period. Now, of course, many sales will have been made up until this point, and we're very close to Christmas already. However, what will be interesting to see is how this does affect the Apple stock price, but also their sales as we do enter the new year, as we don't know how long this kind of halt to US sales will persist for, and what sort of issues this will cause as well. We know that Apple has been engaged in many law in many court cases before, but this is a very significant one because we are timing it in line with Christmas, and as we'll get into, this could massively damage Apple's stock price, with this threatening, of course, Apple's sales. Now, US Apple Watch sales will be halted on December the 21st on online, and then December the 24th in physical stores. So maybe not as significant with the physical stores one, but this stalling it on December the 21st will be very, very significant. This will be the time, of course, when maybe people are trying to get in their last minute orders around that time, or even maybe after that, when the individuals may have more money, maybe they've been gifted something, and of course many people are down on money after Christmas, but certain individuals which may be gifted money or vouchers in relation to Apple won't then be able to use those vouchers or that money for the purchase of goods like the Apple Watch Ultra 2, and this could largely damage those sales which Apple would usually see. Now, a court case concluded a blood oxygen sensor infringed patent owned by Massimo, with this triggering the ITC to issue a limited exclusion order against the products and threatening a ban on imports of the devices. Now, the ITC ruling could, however, be vetoed through presidential review by Joe Biden, of course. It is important to note that sales in other countries are, of course, not subject to the ITC. Now, Apple's legal battles over smartwatch patents with other medical device maker Alicorp, obviously is something that they've already dealt with, and so they have already dealt with previous kind of court cases, but this one is a significant one, most definitely. Now, shares in Apple, which hit new all-time highs last week, fell 1% on Monday morning in New York as a result of the latest developments. Now, Apple is the global market leader in smartwatches with an estimated 22% share of unit shipments in the third quarter, and many shoppers, however, have begun cutting back on buying costly tech accessories, which is why we did start to see these more medical focused developments, which we might not usually see with an Apple Watch, which is more of a consumer brand, but is also now delving into these more niche kind of topics, which obviously becoming more well known, I guess, and more interested by the general public, but this has created a large issue for Apple, so keep your eyes on this. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening. Now, firstly, we do have the US indices, as we have here, playing out in an interesting manner. Now, of course, we noted that most recently we have been seeing US indices on a drive to the upside, and as I've got noted here with this strong black line, you can see how this is the most prior to December the 13th, this was the highest high that the US 30, the Dow Jones, had ever made. But currently we're sitting above that level. And therefore, we're kind of in this kind of overbought territory, as referenced also on the RSI. But obviously this drive to the upside, this break to a new high, was driven by that more dovish rhetoric, as we commented on earlier, by the Fed. So what will be interesting to see now is whether we do see this retracement on the US 30. For the past few days and beginning this week, we have noted the fact that the US 30 has been stalling a bit. So it's an interesting situation to note and look out for, as price does stall, and we do have that opportunity to possibly even retrace the downside before continuing to the upside. So keep your eyes on this. That's all to talk about on the US 30. Keep your eyes on these Fibonacci levels and look out for a retracement. Next to talk about, though, is the dollar. Now, the dollar is, an asset, or a kind of currency, which we did expect to kind of come up and retrace to this 38.20 level. As we had noted, it was a significant area of liquidity. There was a significant Fibonacci level along there, but prices only moved up slightly and kind of stalled actually around that area. So price hasn't yet tapped on this area of liquidity. It kind of has, pushed into it slightly, but not as much as we might expect. And as a result, we are seeing this kind of consolidation as price does interact with this resistance level. It is coming into contact with the previous low, and therefore, we would expect that kind of sell side momentum. But at the same time, we're not seeing an overwhelming amount of sell-side momentum. So maybe we're waiting on some fundamental movements for the dollar to make a significant move. But obviously, as we are going into that Christmas break, we are unlikely to see much significant movement. So quite possibly, this is a pattern that we'll see repeated as we do continue into this kind of last week of the markets of 2024. Next, talk about, though, on the topic of the dollar still, is Euro USD. Now, on the other hand, Euro USD has responded to the area of liquidity that we did note, which was in line with this 38.20 Fibonacci level. That said, price hasn't moved, in a very kind of volatile or significant way away from this level. So maybe that's something to note. But then again, price has interacted with this level. It has reacted in a bullish manner. So in some ways, this would be a kind of bullish confirmation to the upside. But definitely keep your eyes on this, as we're not seeing too much momentum. Next to talk about, though, is USD JPY. We haven't commented on USD JPY much recently, largely because it's been following the same similar patterns that we've been seeing on pound yen. Lots of volatile actions as a result of the yen. But ultimately, price is in an interesting area, as you know, it did kind of make this double bottom, and we are starting to move away from that level in a relatively bullish manner. So keep your eyes on this. It'll be interesting to see how, you know, USD JPY does end off the year after we've seen so much kind of volatility. But definitely we should be looking at these kind of key levels as price now does come into contact with the 38.20 and, you know, arguably this strong liquidity level. So keep your eyes on this. Very interesting situation indeed. Next talk about though is Bitcoin. Now Bitcoin was consolidating, was ranging a lot recently after obviously pushing to some highs not seen for quite some time. But arguably, you know, price is still kind of bouncing around. But after once again tapping that 50% Fibonacci retracement level, and also, you know, kind of tapping that liquidity level and support level once again, we have seen a significant move to the upside. What will be interesting to note though is whether we can break above this kind of top that we did make, which had acted previously as a support level around the 8th of December, but then acted as that kind of resistance level in line with that 61.80. So quite possibly that still holds true, and we do struggle to break above that level. So keep your eyes on this. Next talk about though is gold. Now gold, low momentum in comparison to what we've seen recently, I guess. And although we did see this very large kind of bullish spike following the more dovish rhetoric from the Fed, price is now kind of ranging around these two kind of support and resistance levels. I have heard kind of talks and notes from other people around the 50% Fibonacci level, quite possibly acting and being a potential kind of upside area for gold. But I think this is something to keep your eyes on as we do end off the year, where we are likely to see this momentum fall within the markets, and so we can't really expect too many significant moves. Of course, the markets can be unpredictable and we can see significant moves despite that, but something to keep your eyes on most definitely. Last asset to talk about though, before we move on to the economic calendar, is oil. Now oil is interesting because going into this week we commented and noted this significant area of resistance which oil was coming into contact with, which we did note it also as a significant area where we could see great sell side momentum from. And starting this week, oil reacted in a sell side manner. However, it struggled to make a significant move to the downside. As a result, we did consolidate around that level, and seemingly yesterday price found the momentum to push and break above that resistance, almost creating a shooting star and tapping that 50%. So maybe that's the kind of liquidity it needed. It needed to break above that resistance to grab all the kind of stop levels which many individuals probably had within the market around that level, or in fact, you know, we're now back on an uptrend. But keep your eyes on oil, as it is a kind of interesting situation, because it was coming into contact with that resistance and clearly having a tough time breaking above it. But now we have spiked above it, so maybe price will act differently. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now, firstly, we will be getting the RBA's meeting minutes, so listen out for that. Along with that, we're getting the Bank of Japan's interest rate decision. Now, we're expecting no change, but as we've seen before, the Bank of Japan's rhetoric has been affecting yen foreign exchange pairs greatly. We've seen so much volatility just around the possibility of rates being raised, so we really need to be listening out for the rhetoric from the yen as we do go into today. Obviously, by the time you'll be seeing this video, that decision will be made, so the effect will be great on the markets nonetheless. So keep your eyes on this. Next, talk about though, we will be getting the Japanese balance of trade figure, so another bit of Japanese data. Along with that, we're getting the Swiss balance of trade figure, so important to note, of course. Along with that, we're getting the Eurozone inflation rate figure, so arguably that's the most important bit of data coming out today. So make sure you know what's going on with inflation within the Eurozone. We are expecting a very low nominal inflation rate around the 2.4% figure. Keep your eyes on that. Inflation expectations have usually been too high recently, but that is a very low expectation, so keep your eyes on that. We will also be getting Canadian inflation rate figure. That will be being released as well. And finally, we're getting US building permits data, so listen out for that. That's all to talk about though. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.